Sir, thank you so much for taking time out and speaking with us. I know it's been a very busy day for you, and I appreciate you taking out 5 minutes for this.
Pleasure to talk to it now.
Thank you, sir.
Yes.
Sir, I want to start off by talking with you about your strategy and how you are reading the markets right now. We have seen a lot of up and down in the market, a very volatile market it seems to be. How are you basing your strategy right now?
See, the way I invest is I don't look at the markets. I don't see ET now, I don't see CNBC, nothing. Okay, because we should not bother too much about the prices. We should focus on the value. And value you don't get it by watching televisions and all. You have to look into the balance sheet, meet the management, figure out what the company is doing and what it can do in next 10 years. So understand the underlying value, and then you see whether the value as per you is higher than that of current quoted price. If that is so, go and buy. That's what I keep doing day and night.
Sir, if I understand the situation correctly and if I've understood your investment philosophy, you've had a bottom-up approach. Am I correct to say so?
Yes.
Do you think that in the current market situation, this is something which you can still stick to, or are you sort of deviating a bit from this approach?
No. See, investment philosophy is perpetual. Always you do it. Good time, bad time. In fact, in bad time, you should do it in the absolutely in the same way. This is like a dharma. When in good times you cannot say I'm a Jain, and in bad times you say I'm Muslim or something like that. No, it doesn't work like that. You have to be 24/7, 7 days in a week and 365 days and 20 years, 30 years through the career. You have to maintain the discipline, and when you maintain the discipline, you become very good at it. And then you are able to see very clearly. See, whatever be the style, every person in the market tries to find a gap between value and price. Value is what you get, price is what you pay. People don't differentiate between value and price. You have to figure out what is the value and see the price. I mean, there must be millions of ways. Some people, they look at chart and then figure out what to buy. But I mean, all the investors, they are value investors, and they have to figure out how to calculate the value. And you cannot calculate value of everything every point of time. I could be good in 4-5 sectors. So you could be good in another 4-5 sectors. So you take your picks, I'll take my picks. But on the whole, I mean, if you do a good job, you have to make money.
So we were speaking at length about banks on the podium, and the thoughts you shared were very interesting and thought-provoking. I want to ask you, is ownership important? You mentioned that having skin in the game is important, accountability and management is important. Why do we debate about ownership? How does it really matter who owns the bank at the end of the day, as long as accountability and management issues are in place?
Yeah, so what happens is in the banking system, I have not run any banks, but in the financial markets, the ownership, the understanding of the risk. When I give you 5,000 crores, I mean, I should feel the pain of giving you 5,000 crores. That I must see 10 times that 5,000 crores will come back with the interest. Because giving money is easy, you can distribute trillions of dollars. The point is, how do you get it back? And when you don't give it back, and if it is a public sector, the bill goes to finance ministry. Okay, so there is no skin in the game of the people who are lending the money. So at least in Indian context, I am not saying what is the global and all, but if you see the private sector banks here, they have to, I don't think they have an opportunity to go to finance ministry, here is a 10,000 crores default, so please give me that money. So what is important is whether you have a skin in the game. So I will not give only if I feel that you are not able, if I may not be able to recover the money, or if there is a deficiency in the recovery, I have to have wherewithal to figure out how to make it up. So that is what is called skin in the game. And the alignment, see, once the owner or management, in whatever form they have the skin in the game, what happens is they will conduct the entire lending operation very, very carefully. And it is very important that across the economy, this responsibility is there. And once you have the responsible lending across the economy, what will happen is the very solid foundation will be laid for the economic development.
So how are you reading the developments at the leading private sector banks in the country? They have been hogging headlines for some weeks now. As an investor, how do you read these developments?
I mean, as an investor, we have to take calibrated, build up of the portfolio. That's why you have a diversification. We have 20, 25 stocks. Other fund managers have 40, 50, 60 stocks. So what happens is that if a bank doesn't do well in our portfolio, I mean, yes, I mean 3% is there, 3% will lose, even 33%, you lose 1%. But there will be other banks, there is a second bank which will go up by say 50%. So you make on 3% another 1.5%. So you know that the diversification within the portfolio takes care of all the challenges of the marketplace.
Would you reduce your holding in these banks?
No, I mean, see, you have to have a strategy. I mean, somehow we have avoided investing in any of these banks, but it could be coincidental. But my clear understanding that I would not like to buy a lender if he doesn't have skin in the game. That I am practicing for last 20 years. So that's how we have avoided most of the mishaps.
Sir, thank you so much. I will not hold you back any longer. Thank you very much for your time, sir.
Thanks.